Hey, what's up everybody? Welcome back to the channel. My name is Stacked and Grounded, and today we got a blockbuster story. Electronic Arts, or EA, is being bought out in a mega deal involving Saudi Arabia. I'm going to walk you through who bought EA, how much they paid, what they said, and which records this deal just broke, including what the previous record was. Let's get into it. And I'm going to try to make this really easy to understand because it's going to be a lot of numbers. So this happened on September 29, 2025. EA had announced it had entered into an agreement to be acquired by the consortium comprised of Saudi Arabia's Public Investment Fund, or PIF, Silver Lake Partners as well, and Affinity Partners. And that is Jared Kushner's firm. So all you really need to know is that it wasn't just bought by Saudi Arabia, it was also bought by two other partners as well. The all-cash deal values EA at $55 billion in enterprise value. That's a lot of dough. But when you think about it, they are still buying one of the biggest video game companies. And EA has so many franchises that they currently own, like Madden, FIFA, The Sims, Battlefield, Apex Legends, Need for Speed, Dragon Age and Mass Effect, Skate, all of that stuff and more. Alright, I'm gonna get back to the deal in just a second. I just wanted to mention that because a lot of people have been playing on EA's top. Like, I know that they haven't been the best video game company by any means, but Nintendo is kind of boo-boo too. But that don't mean that they don't own a bunch of franchises already. Anyways, under the terms of the contract, EA shareholders will receive $210 per share in cash, representing a 25% premium over EA's unaffected share price of about $168.32 before the takeover rumors. Now we're going to get into a financing breakdown of it. The equity portion is $36 billion from the consortium, including PIF rolling over its existing 9.9% stake. So they own 9.9% of EA before this deal even started. And the debt portion is $20 billion in debt financing arranged led by JP Morgan, of which $18 billion is expected to be deployed at closing. So I bet you're wondering, where did all the debt come from? You see, that's why we're watching. We're gonna explain this stuff to you. I had the same question when I first read this story. I was like, wait, $20 billion in debt? What are you talking about? So like I said, the total bill was $55 billion. This was between PIF, Silver Lake, and Affinity Partners. They did end up putting the deal on the dotted line. However, it wasn't $55 billion like they would like you to believe was just shelled out. No. That $20 billion left over in debt is what they owe to Chase Bank. No, they don't each owe $20 billion. But what I am saying is that the three companies listed each owe a percentage of the $20 billion in debt. I hope that gave you all a clear understanding of what's going on in the debt portion. Alright, and as I said already, PIF already held 9.9% of EA. In this deal, that stake is rolled over into the new structure. So out of the $36 billion that the companies put down for the deal, but see, PIF actually does not owe any money because they're just rolling over its 9.9% stake. The deal is subject to regulatory and shareholder approval, and it is expected to close in Q1 of EA's fiscal 2027. Once it's closed, EA will be taken private and its stock will be delisted from public exchanges. Now we're going to go into what they've said about the deal. EA's current CEO, Andrew Wilson, will remain in place and the company will maintain its headquarters in Redwood City, California. The press release states that the transaction allows EA more flexibility, without the constant scrutiny of public markets, to accelerate innovation and growth in entertainment, games, sports, and digital experiences. The consortium parties made statements as well. PIF leadership emphasized their commitment to gaming and esports, seeing EA as a strategic piece in their entertainment investments. Silver Lake expressed that EA is a special company with a strong IP, revenue growth, and cash flow potential. And last, Jared Kushner of Affinity Partners commented that he admired EA's long-standing franchises and is excited to partner in the next chapter. So obviously $55 billion, that is a huge deal. This transaction is being called the largest leveraged buyout ever by dollar value for a public company. It is also the largest all-cash sponsor deal taken private deal in history. This deal surpasses the previous record held by TXU buyout in 2007, which was valued at around $45 billion, including cash and debt. Some sources note that 2007's TXU leveraged buyout by KKR, TPG, and Goldman Sachs was the largest of its time. Comparing the two, the EA deal at $55 billion now exceeds the TXU $45 billion record by a wide margin, making the EA deal a new high watermark in buyout deals. So why does this matter anyway? Well, a sovereign wealth fund by Saudi Arabia gaining full control over a major gaming company signals a big shift in cultural and geopolitical investments. Going private frees EA from short-term market pressures, possibly enabling longer-term bets like AI, new tech, riskier game development. For shareholders, $210 per share is a guaranteed cash exit. Many may see it as a nice premium. Now, going deeper into the risk and monitoring points, I'm gonna tell you now, I'm not going to get political. Now, there is regulatory scrutiny, especially dealing with foreign capital or sovereign state involvement with US tech. There is an execution risk, and EA must justify the debt and fulfill promises for growth. For their strategy shifting, how will the new ownership steer franchises like Madden, The Sims, and Battlefield? And from a cultural perception, gaming fans may question how politics or national agendas influence the media. As an investor or watcher, keep an eye on the integration moves like layoffs and restructuring, new IPs or acquisitions. You can also look for changes in monetization, especially in live services or subscriptions. You can also look for regulatory reviews or national security concerns. Right now, EA has two main subscription tiers like EA Play and EA Play Pro. EA Play costs approximately $5.99 per month or $39.99 per year, offering access to a library of games and new trials of releases, and EA Play Pro is a higher tier costing about $16.99 per month or $119.99 per year. And of course, with EA Play Pro having a higher price range, it offers even more benefits like access to new releases from the day of launch. So definitely keep your eye on those with this new deal because the price may go up. Alright, so that's pretty much the meat and potatoes of this new deal. I'm just going to break it all down in an overview for you one more time. Saudi Arabia's PIF, Silver Lake, and Affinity partners are buying EA in a $55 billion takeover. It breaks the record for the largest leveraged buyout, overtaking TXU's 2007 $45 billion deal. EA shareholders will get $210 per share. Boy, do I wish I had some EA stock right now. But it looks like I can't get any in the future anyway, so whatever. And the main motive behind it was freedom from public pressures, expansion of the company, and new growth paths. If you're into this kind of business drama, please drop a comment. Do you think that this is a good or a bad deal for gamers? And would you want a sovereign wealth fund controlling your favorite studios? Honestly, I wish they did this for Media Molecule, who owns Little Big Planet. I miss that game so much, you don't even understand. I'm not going to go into what happened with Media Molecule, but I encourage you to watch another video so that you can fully understand that if you're also a fan as well. Well, if you got value from this video, please hit the like, subscribe, and share so that more people know what's happening behind the scenes. Thank you again for tuning in to me. My name is Stacked and Grounded. Let's build, y'all.